Good day, everyone, and welcome to the QIWI third quarter 2020 earnings conference call. Today's conference is being recorded. At this time, I would like to turn the call over to Mrs. Barbara Kiseleva, Interim Chief Financial Officer of QIWI. Please go ahead.
Thank you, operator, and good morning, everyone. Welcome to the QIWI third quarter earnings call. I'm Barbara Kiseleva, Interim Chief Financial Officer, and with me today are Boris Kim, our Chief Executive Officer, and Andrei Protopopov, Chief Executive Officer of the Payment Services segment. A replay of this call will be available until Thursday, December 3, 2020. Access information for the replay is listed in today's earnings press release, which is available at our investor relations website at investor.qiwi.com. For those listening to the replay, this call was held and recorded on November 19, 2020. Before we begin, I would like to remind everyone that this call may contain forward-looking statements as they are defined under the Private Securities Litigation Reform Act of 1995. These forward-looking statements about our expectations for future performance are subject to known and unknown risks and uncertainties. QIWI cautions that these statements are not guarantees of future performance. All forward-looking statements made today reflect our current expectations only, and we undertake no obligation to update any statements to reflect the events that occur after this call. Please refer to the company's most recent annual report on Form 20-F filed with the Securities and Exchange Commission for factors that could cause our actual results to differ materially from any forward-looking statements. During today's call, management will provide certain information that will constitute non-IFRS financial measures, such as total net revenue, adjusted ebitda, adjusted net profit, and adjusted net profit per share. Reconciliations to IFRS measures and certain additional information are also included in today's earnings press release. With that, we'll begin by turning the call over to Boris Kim, our Chief Executive Officer. Boris?
Thank you, Barbara, and good morning, everyone. Thanks for joining us on this call today. I'm glad to share our third quarter 2020 financial results. This quarter, we continued to demonstrate robust performance in our Payment Services segment, as well as in our other projects. Our Payment Services segment showed solid results and delivered 11% net revenue and net profit growth. This growth was largely supported by several factors, including abnormally high density of sport events in the third quarter, as well as growth in our strategic self-employed streams. This quarter, we also successfully closed the sale of Sovest and conclude the wind down of Rocket Bank. This helped us to refocus on our core payment business as well as on projects that can be synergetic to our key products, consumer interests, and competence. This being said, we also continue to optimize and improve the efficiency of our operations across all projects. Moving further, I would like to share with you our several trends that I believe are currently important for our business. Today, we see increasing uncertainty related to the spread of coronavirus. Moreover, as a result of several other factors, we may expect further deterioration of the consumer patterns and disposable incomes in Russia. We have not yet seen any substantial effects of the decrease of the purchasing power of the population on our operations. Our diversified portfolio of services and circular growth in our key markets cushioned the negative trends so far. However, we may expect certain negative effects to be visible going forward and into 2021. Secondly, we have noted in the past and are likely to continue to see in the future constant efforts of our governmental bodies to adopt more robust and stringent regulations in respect of our key products and markets. This may include, without limitations, more elaborate wallet QIWI requirements, establishing certain limits for the digital wallet transactions, both in respect of the types and maximum amounts, specific rules and regulations in respect of the cross-border transactions and regulation of the sport betting market. As of today, a number of legislative initiatives is being discussed by different legislative bodies, formally or informally, that can eventually become legislative proposals or laws and impose additional pressure on our operations. As of now, we cannot make any reliable assessment of the impact that these trends may have on our 2021 results of operations, but we continue to closely monitor the situation and will provide our 2021 guidance in due course. Despite uncertainty and challenging economic and operating environment, we see diverse opportunities for growth in mid and long term, including through general digitalization trends, new niches and services for self-employed, as well as certain B2B products and services. I do believe that we are well positioned to continue developing our business and strengthening our ecosystem to provide our clients with the best-in-class digital solutions. Now, on some operating highlights. Third quarter 2020 total net revenue increased 11% to reach 6.6 billion rubles, up from 6 billion rubles in the third quarter of 2019. The increase was mainly driven by payment services segment and corporate and other category net revenue growth, as well as by positive contribution of Rocket Bank, as opposed to negative effect on total net revenue for the same period of the prior year. Andrei will discuss the performance of our payment services segment in a minute, while I walk you through the results of our other projects and segments. Corporate and other category net revenue was 449 million rubles as compared to 268 million rubles in the third quarter of the prior year. Net revenue growth in other category was primarily driven by Factoring Plus net revenue growth. Factoring Plus net revenue grew to 182 million rubles as compared to 55 million rubles in the third quarter of the prior year. Factoring net revenue growth was driven by the scaling of the projects, including the expansion of bank guarantees and factoring portfolios. In the third quarter of 2020, factoring portfolio increased by 15% to reach 3.8 billion rubles. Bank guarantee portfolio grew by 26% to reach 16.7 billion rubles. Both products performed well and continue to maintain low NPL level. Given the results of the project and the trends we currently see, we aim to further develop these products by scaling our current products as well as by expanding Factoring Plus product proposition. Tochka net revenue for the third quarter 2020 was 126 million rubles compared with 199 million rubles in the third quarter of the prior year. Tochka net revenue decline primarily resulted from a decrease in revenue generated from cash and settlement services due to low number of active clients in QIWI Bank. At the same time, the consolidation of the Factory project starting from December 2019 also contributed to the net revenue growth. As I've already mentioned, in the third quarter, we successfully completed the sale of service project and concluded the Rocket Bank wind down process. Thanks again to the team for an outstanding job done. Further, I'm happy to share that in October 2020, we placed the first ever QIWI ruble denominated bond entering Russia debt market. However, we'll give you more details shortly, but I would like to mention that the placement enjoyed a strong interest from both institutional and retail investors, which we believe is a good sign that general market as well as QIWI customers value our story and believe in our business. Moving on, I'm glad to announce that following the determination of the third quarter 2020 financial results, our board of directors has approved a dividend of 34 cents per share. We remain committed to the target dividend payout ratio of at least 50% of the adjusted net profit for 2020, approved by the board in March. The board of directors reserves the right to distribute the dividends quarterly as it deems necessary so that the total annual annual payout is in accordance with the target provided. However, the payout ratios for each of the quarters may vary and may be above or below provided target. Finally, I would like to announce the appointment of Pavel Korsh as the Chief Financial Officer of QIWI, effective December 1st, 2020. Pavel has over 20 years of experience in finance. He joined QIWI in August this year and has served as the CFO of QIWI Bank since then. Given Pavel's extensive financial knowledge, impressive background, and strong focus on delivering results, I'm convinced that Pavel will be able to support our further growth, strategy execution, and help us extend our business further. With this, I will turn the call over to Andrei for an update on our payment services business. Andrei.
Thank you, Boris, and good morning, everyone. Thanks for joining us. Moving on to the result of our payment service segment. For the third quarter 2020, our payment service segment volume increased by 11% to 435 billion rubles, driven primarily by growth in e-commerce and money remittance market verticals, offset by a decline in financial services and telecom market verticals. As we've discussed on numerous occasions, we started to see volume recovery in June as the quarantine restrictions were eased and the majority of sports events were back on track. Different self-employed use cases also started to recover once the lockdown was over. Hence, our e-commerce volume were driven to a large extent by abnormally often sport events, as well as by a growth of different other digital entertainment subcategories. The continued growth in money remittance verticals at the same time was largely driven by the strong performance of the contact money remittance system, primarily resulting from the growth of the Tajikistan corridor, underpinned by the development of the contact mobile application. Significant increase in payouts resulting from the scaling of our strategic self-employed streams also contributed to the performance of money remittance category. For example, in the third quarter 2020, we connected to our platform over 480 taxi companies, continued to improve our services for taxi park and other self-employed use cases in order to support further growth in the stream, and started to develop several new niches. At the same time, some of the categories primarily connected to our physical distribution, such as travel and ticketing or loan repayment, continued to be adversely affected by the restriction related to the COVID-19 and overall economy slowdown. As Boris mentioned, so far we have not seen any significant slowdown in our volumes or revenues resulting from lower purchasing power of population in Russia, thanks to our diversified product mix and resilient niches. At the same time, we believe that further deterioration of the situation can negatively affect some of our categories, including not only our physical distribution, but our core categories like, for example, e-commerce. At the moment, we remain cautious and closely monitor how the situation evolves, doing our best to mitigate key risks and uncertainties. In order to maintain our growth, we continue to look for new use cases and develop new niches and products. For example, we are piloting certain projects in our payment service segment, such as debit card program for our partners and their employees, earlier developed in Rocking Bank, or payday loans for our key user groups, as well as certain B2B focused services. We believe that such products will help us expand our B2B2C product proposition and provide more demanded, diversified, and relevant services for our clients, cementing our market position and growth. Going back to the third quarter results. Payment services segment net revenue increased 11% to reach 6.1 billion rubles compared to 5.5 billion rubles the prior year. Payment services payment adjusted net revenue increased 13% to 5.3 billion rubles, up from 4.7 billion rubles in the prior year, primarily due to the volume growth supported by the slight improvement of the payment average adjusted net revenue yield. Our payment average adjusted net revenue yield was up by 2 basic points year over year to 1.22%, driven by increasing share of e-commerce and money remittance volume in total volume. At the same time, e-commerce and money remittance verticals adjusted net revenue yields have declined year over year due to changing product mix with higher proportion of low yielding products, such as, for example, acquiring in these categories. Payment services other adjusted net revenue was 106 million rubles as compared to 808 million in the prior year. Fees for inactive accounts and unclaimed payments increased 5% to 506 million rubles from 484 million rubles in the prior year. Interest revenue decreased year-over-year, mainly due to lower central bank rates. This quarter, we continued to see a decline in the number of active QIWI wallets from 22.3 million as of September 30, 2019 to 19.7 million as of September 30, 2020. We believe that the key factors that resulted in such decline related primarily to the regulatory and operational reasons rather than any substantial changes in the consumer preferences or economic slowdown. Such decline did not substantially impact our financial or operating performance due to increasing diversification of our product proposition and operating models. At the same time, we believe that certain regulatory initiatives that are being discussed from time to time, as well as continued economic slowdown, have a potential to negatively affect our operating performance in the future. Our growth this quarter was supported by the robust performance of our key products and core competencies. Although at the moment we see many challenges ahead and remain cautious, we believe that we are well positioned to continue to grow our business, enrich our suite of services, develop new niches, and create new use cases for our users, merchants, and partners. Simultaneously, we are working to improve and optimize our operations in order to lay a groundwork for sustainable long-term growth. With this, I will pass over to Varvara for more details on the financial performance of the group. Varvara?
Thank you, Andrei. Moving on to expenses. This quarter, our payment services segment continued to demonstrate robust operating performance and generated strong cash flows supported by good performance of our other projects. In the third quarter, we have significantly increased overall efficiency of our operations as well as our margins through successful divestiture of the key investment-intensive projects as well as other cost control and optimization measures that we have started to implement in the beginning of this year. Before we move on, I would like to highlight that going forward, I will refer to the segment numbers that include the effects of both continued and discontinued operations under IFRS. For the avoidance of doubt, as of September 30, 2020, Soris and Rocketbank projects are presented as discontinued operations in our IFRS financials. This being said, adjusted ebitda increased 60% to 4 billion rubles. Adjusted EBITDA margin was 61% compared with 42% in the prior year. Adjusted EBITDA margin growth primarily resulted from total net revenue growth, underpinned by a decrease of selling, general, and administrative expenses, resulting from a decrease in marketing, advertising, and client acquisition expenses, driven mainly by the termination of Soris and Rocketbank marketing activities. This was partially offset by an increase in personnel expenses, primarily related to payment services segment personnel expenses growth, as well as consolidation of Flocktory. Group adjusted net profit increased 73% to 3.3 billion rubles from 1.9 billion in the third quarter of the prior year. The growth of adjusted net profit was primarily driven by the same factors impacting adjusted EBITDA, as well as by an increase in foreign exchange gain that was offset by an increase in income tax. Payment services segment net profit increased 11% to 3.6 billion rubles, driven primarily by payment services segment net revenue growth, offset by an increase of payroll and related taxes, excluding effect of share-based payments, predominantly driven by higher bonus accruals and expenses related to the cash-based LTI compensation program. Consumer financial services segment net loss was 137 million rubles in the third quarter 2020, as compared to 424 million rubles in the same period of the prior year, resulting primarily from a decrease in personnel expenses, including effect of share-based payments, and selling, general, and administrative expenses due to the project sale, as well as credit loss recovery compared to the credit loss expense for the same period in the prior year. Rocketbank segment net loss was 165 million rubles compared to 632 million rubles in the prior year, resulting primarily from better net revenue performance, as well as decrease in personnel expenses and selling, general, and administrative expenses resulting from the project wind down. As Boris has already mentioned, in October 2020, QIWI has placed a 5 billion ruble unsecured bonds due in 2023. The final coupon was 8.4%, significantly below the initial range, and the placement enjoyed strong interest and was oversubscribed. At the moment, the main purpose for raising debt is funding the development of a number of current projects, primarily funding the growth of factoring portfolio of factoring plus projects. At the same time, we do strongly believe that it was a good opportunity to optimize our capital structure. Now on to our guidance. Firstly, I would like to remind everyone that at the moment we have limited visibility regarding the potential impact of the outbreak of COVID-19 strain of coronavirus, as well as certain other factors on our business. In addition, it is currently unclear how much consumer demand will be negatively affected from the outbreak of COVID-19 and what effect such outbreak will have on the macroeconomic environment as a whole. The full impact remains uncertain and will depend on the length and severity of the effect of the coronavirus on economic activity in our market. Our outlook reflects our current views and expectations only, and is based on the trends we see as of the date of this earnings call. If such trends were to deteriorate further, the impact on our business and operations could be more severe than currently expected. We continue to monitor the situation closely. Having said that, we reiterate our guidance in respect of 2020 outlook. We expect group total net revenue to increase by 7 to 15% over 2019. Payment services segment net revenue to increase by 3 to 10% over 2019, while adjusted net profit is expected to increase by 35 to 50% over 2019. Although we see our 9-month results as a solid foundation for our 2020 performance, certain other factors remain beyond our control, and we reserve the right to revise our guidance in the course of the year. With that, operator, please open up the call for questions.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for your question. Our first questions come from the line of Ilber Davletshin of Wood & Co. Please proceed with your question.
Good afternoon. Thank you for the opportunity to ask this. Congratulations with good, strong results. So I just wanted to ask one question on your core payment business, and particularly the e-commerce segment. So we noticed there's a decline in net revenue yield, which is partially understandable. And so the question is, do you see this as a sort of sustainable new level going forward, or is there still downside risk to this around 2.2% yield? And then separately, on the self-employed, it seems like you also making good progress. At the same time, other competitors like Sberbank and Yandex have also plans in that segment. Do you see any direct competition, or if you could talk a little bit maybe more about the niche that you operate, if it's kind of safer for your operations? And maybe just on other revenues, like seems like it's also making very good progress. Could you maybe speak a little bit more about the prospects that you see there, like in terms of maybe contribution overall to your revenue in the next, I don't know, couple of years, in terms of the potential? Thank you.
Hello, thank you for your question. I will cover first 2 ones regarding the e-commerce yields and self-employed. So for e-commerce, the reasons are, as we described, that we now selling more broader range of the products, including online acquiring, and the share of online acquiring is bigger is growing versus our traditional QIWI wallet. So I would say that we may see certain continue of this trend, though we believe that those yields will be generally on quite high levels because our e-commerce is digital entertainment where yields are normally high versus traditional e-commerce. Talking about the self-employed, we are targeting specific, I would say, markets. We are not targeting all self-employed that we have. So and on those markets where we are playing, including, for example, the taxi companies and taxi drivers, scrap metal pickers, webmasters, and some others, we have certain competitive advantages because we build kind of tailor-made ecosystem for those markets and with the tailor-made solutions that fit exactly our partners on those markets. At the same time, I would say that overall focus of the industry, including our competitors on those markets, is a reflection that this market is interesting and is growing. And at the same time, in those markets we are playing in and some others, we are not yet, I would say, a lot competing with each other. We are more competing with the cash payment. Because even in the, the scrap metal pickers market, the majority of the market is cash-based. On the taxi market, big portion of the market of how taxi companies are paying to the drivers is cash-based. So there is still, I would say, huge opportunity to grow, to move from those cash-based payments to the online payments. And the more players are there, the faster this will be. This move will go. So in a way, on those markets, we are. It's good to have a competition. While our, I would say, competitive edge would be to not to try to have the broad market products, but to have this, I would say, a larger focus on the specific niches where we can provide the strongest proposition.
Okay, maybe just could I double check on your first comment? So, do you expect this third quarter net revenue yield in the e-commerce to be sustainable, or I didn't get the answer because the line wasn't quite clear?
So could you please repeat? I have something with the voice.
Mm-hmm. Yeah, I was trying to ask about the answer to the first question on the net revenue yield. So the level which we saw in the third quarter, do you think this is sustainable, or is it can go down from this level?
Yeah, as I said, it still can go down a bit, though I think it will stay on some quite high, I would say, quite high levels overall. So it may go down a bit in the next quarters as well.
I see. Thank you.
Thank you. Our next questions come from the line of Chris Kennedy with William Blair. Please proceed with your question.
I think we had one more question regarding our new businesses. So I could comment if it's possible. So the question was about contribution of new businesses on mid-term and long-term perspective. You know that after closing, selling service projects and winding down of Rocket, we have two business verticals left, Flocktory and Factoring Plus. And as we discussed during our previous call, they perform very well. and they perform even better than we expected at the beginning of the year, especially during this COVID pandemic we have. We're still working on our strategy and midterm business plan, but I could say that in long-term perspective, say on the horizon on 2023, we could expect these new businesses could bring us like 20-25% of our net revenue on a group level.
Thank you. Thank you very much.
Okay, apologies. Our next question has come from the line of Chris Kennedy with William Blair. Please proceed with your questions.
Great. Thank you for taking the questions. Boris, one follow-up on those B2B initiatives. Can you talk about the long-term profitability of those?
I believe that the question is about Factoring Plus and their business model, how sustainable it is. So at the moment, we see very good profitability in this segment, and talking about long-term and mid-term perspective, we think that although we could expect some decrease in profitability and in margin, in general, we expect that the margin will be rather high because of two reasons. We work in a very special segment of small and medium-sized enterprises, which have contracts with big reliable companies, and for them it's not a question of margin. For them it's a question of time. So we could enjoy a rather high margin, and on the other hand, the NPL, the cost of risk in such operations is rather low, say compared to the loans for small and medium-sized enterprises, in which we have practically the same NPL as for retail loans, around 10 to 15%. In factoring operation with these companies, we have a cost of risk less than 1%, even in this during this crisis.
Okay, that's very helpful. Thank you. And then just, can you give a little bit more color on the potential regulatory changes in Russia and how that would impact QIWI's business and how you would navigate potential changes? Thank you.
Well, as I mentioned earlier, we have a few initiatives from the government and legislative bodies regarding two key markets. The first one is betting, and the speed at which they change the legislation is astonishing, even for Russia, because they just adopted two new laws in July, changing the legislation for bookmakers in terms of taxation and offshore beneficiary ownership. And now they prepare two new laws which now are being discussed at the level of the government. This law is about further increase in QIWI taxation of bookmakers, and the second law is about changing the whole regulation of bookmakers companies, including creating unified TSUPIS. Now, I remind you, we have two TSUPIS. One of these TSUPIS is QIWI. So it's very early to predict any material effect on QIWI business, but for sure, that's very important change in the regulation. And the second law is about foreign e-money wallets. At the moment, it's about they try to introduce a special form of reporting of owners of these wallets for Federal Taxation Office and for Central Bank about the operations. It wouldn't directly impact our operation, but of course that's a sign of the level of attention the regulator to the e-money and to the electronic wallets, especially in trans-border payments. So it's a sign of this attention, and potentially they could limit such operation, and that could have an impact on our business in this case.
Very helpful. Thank you, guys.
Thank you. Our next question comes from the line of Maria Supanova of BCS. Please proceed with your questions.
Yes, good afternoon. I just wanted to ask you to elaborate a little bit more on this regulation part, specifically about SEC's initiative you mentioned about creating single TSUPIS. Could you please tell us, have there been more developments on this front so far? I'm just wondering, like with this press release, you seem to have stressed specifically regulatory risk. And we know that regulatory risk is general background risk for the business in general. So I wonder, the fact that you have stressed it now, is it because you are really concerned about what's going on regulatory front, or it just reflects that have been so many initiatives so far, which together might be, if approved, negative. So just to understand if you're feeling that regulatory environment is indeed could be potentially more harmful at this point. Thank you.
I'm sorry. Unfortunately, one of the lines may be muted. We can't hear your response.
Sorry, I was on mute. Thank you for the question. So talking about single TSUPIS, the situation has changed since September or since August when we had the last earning call, because in August that was just a proposal from Blockchain Federation, which was discussed at the level of government, and now it's a draft law which is now in Parliament, and so they started to consider this draft law. That's a huge progress in this. That's why we put this sentence in our press release even, because the situation is changing. At the moment, it's difficult to predict whether this draft law will be adopted eventually, and what will be the final test, and who will be the single TSUPIS. We also have chance to be the single TSUPIS, and that's going to be much better for us even, because we would serve the whole market instead of half of it. But the truth is here, the situation is changing and is becoming more uncertain.
Thank you. And just a quick follow-up on factoring. Do you still confirm your plan to double a portfolio of half and half to 8 billion rubles by the end of the year, or there is some slowdown in this respect?
Masha, yeah, I'm sorry, Boris, please comment.
No, Varga, go ahead. Go ahead.
Yeah, Mash, thank you for your question. I wanted to outline that, of course, factoring business is quite seasonal, and we always see significant increase in the portfolio numbers in Q4. However, of course, given the current levels, the portfolio would probably be slightly less than 8 billion, though more or less in this, I would say, proximity.
Understood. Thank you.
As a reminder, if you would like to ask a question, please press star 1 on your telephone keypad. Our next questions come from the line of Vladimir Bespalov of VTB Capital. Please proceed with your questions.
Hello, congratulations on good numbers, and thank you for taking my question. I would also like to follow up on the regulatory issue. Probably you do some stress case scenarios, and if we assume that the situation develops according to worst case scenario, you are not the founder of this new single 2% things like this. Could you give a very rough maybe estimate what kind of hit your adjusted net revenues or whatever metric could take in this event? And I have also a question on what Andrei mentioned during the prepared remark on Tajikistan. Maybe you could elaborate a little bit on this project and what is the contribution of this project to your performance. Thank you.
Let me probably start from Tajikistan part of your question. So Tajikistan story is the following. So starting from the end of the last year, there was a new regulation from the Tajikistan Central Bank for companies, for money remittance companies to operate there. And not all of the key players in Russia were able to do so. So we get the kind of competitive advantage there, and our volumes grew significantly in this corridor. Moreover, in second quarter of this year, we launched contact mobile application that enrich our product proposition from being able for clients to send money from our partners, retail and banks, to be able to do it directly from mobile app. And it's growing quite successfully as well. So all of this help us to grow the volumes and revenues of the contact money remittance this year quite significantly. So it's I would say now close to doubling versus last year. So that impacted our money remittance vertical quite strong, specifically in terms of the volumes.
So I will answer to your question regarding betting. It's at this stage it's very early to make such stress scenario, just because the legislation itself it's not even on the first reading, and statistics of Russian laws show that only 80%, so 80% of the law which are put into the parliament, only 20% goes further from the first reading. And there are two competitive laws at the moment, one from the government, but it's still not in the parliament because it's being still discussed at the level of the government. And the second one about single super is already in the parliament, but not on the first reading even. So I would say that at the moment it's a very theoretical discussion. What will be the real hit on our net revenue if and when this legislation will be adopted. So at the moment, we couldn't just give you any numbers. But we have to warn you, and we have to discuss that could be probably an impact on our net revenue in the future.
Okay, thank you very much.
Thank you. Our next question comes from the line of Anna Kurbatova with Alpha Bank. Please proceed with your question.
Good afternoon. Thank you for taking my questions. Two minor questions about operations. First of all, on Rocketbank and Service, could you give some guidance or provide us some expectations? Should we expect further scaling back in the losses until the end of the year, or the processes that you are making now with these assets are likely to produce more or less the same result on the net EBITDA by net profit basis in the fourth quarter? And the second question, I note that telecom part of your payment volume business has significantly reduced volumes, transaction volumes in the fourth quarter. So could you make some color on the trends there? Thank you.
Hello, Anna. Thank you for your question. So on the first question regarding Rocketbank and Service expectations, as Boris mentioned, we have already sold and closed Service transaction, and we have substantially winded down Rocketbank operations. We don't expect any cost associated with any material cost associated with two of the projects in Q4 2020, and all costs associated with the pilots that are being run in payment services. This are part of the payment services business costs, and as well do not represent any material amount. So in this respect, the total losses that we have earlier guided for Rocketbank and Service, and that have been already booked in Q1 to Q3. And this is everything we expect to record on our books for this year.
Regarding the telecom question, this is in line with our performance on the physical distribution that we already mentioned. So meaning our self-service kiosk network and retail network, that those channels were still, I would say, under pressure during the third quarter. So the telecom volumes are there as well. So they are the same reasons that for loan repayments or some other categories that are majorly represented in the physical distribution.
Thank you very much for this comment. And do you see any, on the other side, gain in the digital online payments for telecom services? So, I mean, when you lose some of the physically based transactions, do you protect part of them as part of maybe e-commerce payments? Thank you. Oh, no,
yeah, we will obviously see the growth in e-commerce and specifically in the digital entertainment, and that's reflected in our numbers because our majority of our growth is coming from those categories. At the same time, we have some volumes of the telecom as well with our bank partners and with the wallet where there is more, I would say, positive trends in those categories. However, proportionally, those channels for the telecom is smaller versus physical distribution. That's why on the overall numbers we see the decline.
Oh, okay, thank you very much.
There are no further questions at this time. On behalf of the QIWI team, thank you for your participation. This does conclude today's conference. You may disconnect your lines at this time.